All right, this is one of my more favorable topics, which is the study of institutional order flow. All right, and we don't need a tick chart or a futures feed or anything like that to basically define what the current state of institutional order flow is, because we can just look at a chart and ask ourselves: our down close candle support and price, our discount arrays support and price, our premium arrays being taken out, our up close candles being taken out, so on and so forth. Right. So institutional order flow should be understood as the overlying sentiment or direction of the market at any particular moment. Right. This understanding is fractal. All right. Now, so for smart money traders, that means seeing price respect premium arrays while negating discount arrays and vice versa. The trader must understand that as price moves from premium to discount, order flow changes on a lower time frame to reach a higher time frame objective, right? So what that means is if if price trades, if this is a range and price is trading up to premium, right? On the way up to that premium, that means that lower time frame institutional order flow, all right, is going to be bullish until it meets that higher time frame array. All right. Once it meets the higher time frame array, then order flow is going to transition over on a lower time frame first to back to bearish, and then back in alignment with the overall higher time frame institutional order flow. All right. So now once that higher time frame array is met, the trader has the opportunity to either take the array for face value, right? Meaning, hey, once price reaches that array, you can either just take a short, or, right, which I think is a lot more proficient, you can allow IPDA to show you when order flow has changed back into alignment with the order flow that presented the array or the high time frame array to begin with. All right. So if the trader lacks understanding of institutional order flow on a monthly, weekly, and daily time frame, it's going to limit his or her exposure to high probability setups. All right. So one of the most profound understandings when it comes to institutional order flow, or this conversation about institutional order flow, is understanding that there's only ever a buy side of the curve, all right, and a sell side of the curve. Okay, because this market is a compilation of buy and sell programs, is always a form of redistribution or reaccumulation. All right. And when the market is on the buy side of a curve, down close candles will support price. When the market is on the sell side of a curve, up close candles or premium arrays will support price. All right. So what that means is as this market is trading higher, right, goes here, comes out of that, goes back down here, right, to the extent of that down close candle there. Same idea, back down to the extent of that down close candle here, back down to the extent of that down close candle, right? And then price reaches the higher time frame array. Okay, and then what happens is once it meets that higher time frame array, we take this, we duplicate that. What's going to happen is that is going to transition over into those up close candles supporting the direction of price. All right, so you don't necessarily need market structure for this. All right, but what we see is there's a change in institutional order flow. So we've shifted from the buy side of the curve to the sell side of the curve. All right, seeing that those up close candles are now supporting the direction of price. Okay, and the same understanding applies if we're looking at the opposite side of the curve. All right, we take that and we place that right here. We're seeing price travel lower, back higher to the extent of that up close candle, travel lower, stops back into premium array, right? Stops inefficiency. We go stops back up into here, right? And then maybe we have a failure swing or we tap into the array. And then now price transitions, it goes from sell side of the curve to buy side of the curve. All right. This understanding is fractal. There is no time frame attached to this depiction. All right. This could be a 15-minute range, right? And this is that 15-minute array. This could be a 1-minute time frame, right? Price reaches the array, order flow changes over. All right, you'll always see the same phenomenon. You can't price does not trade back lower without you being able to see bearish institutional order flow. Price does not trade higher without you being able to see institutional order flow. All right, that is a profound understanding. Okay, so if we look at this image here, all right, if you look at right here, prices obviously it's going stops and balance, stops and balance, stops and balance down into higher time frame array. All right. However, what I'm showing you here is as price is moving up, what's going to be occurring is that down close candles are going to be supporting the direction of price up until the point that price reaches the premium array. Once it reaches premium array, I'm sorry, I said down close candles and drew up close candles. But down close candles are going to be supporting the direction of price right here. All right. Once we reach that array, then you're going to see price is going to transition over. And then you're going to see that these up close candles are now supporting the direction of price. All right. That phenomenon occurs and continues up until price reaches, right, a more parent order flow. Right. So once we zoom out, we see that, oh, down close candles are supporting price. So from a higher time frame perspective, we're on the buy side of a curve. All right. This is just a retracement. All right. So when we're seeing this, we're seeing a retracement, right? And price reaches down here to this, this parent order flow. Okay. And then now we're seeing that fractal form, right? We're seeing that short-term low created, runs down into the array, that intermediate term low, right? Price pushes above here. All right. Now we're potentially seeing that order flow has changed over, and we should see that down close candles after that point starts to support the direction of price. This could be price trading from, stops down into inefficiency back up to stops. Okay. And, that just understanding and viewing price from that lens. Okay. Because this could be any time frame. This could be a 5-minute time frame looking at 30-second institutional order flow. This could be a monthly time frame looking at daily institutional order flow. All right. So if we look here, I'm going to show you guys a 6-month chart all the way down to a daily chart, I believe. Yeah, all the way down to a daily chart. So if we're looking at this 6-month chart here, okay, and we ask ourselves, we say, what's the current state of order flow on this chart, right? Price is obviously, it's creating these, expansions higher, right? Running back down into discount arrays. So discount arrays are supporting the direction of price. We could consider this a breaker. All right. And then we also have the buy side imbalance, which is a discount array. Price comes down into here, back up. And then now we've traded down into discount array. All right. This is a 6-month chart. Right. Also pay attention to the inefficiency here. All right. So if we go down into the next time frame, 3-month chart, right, things will become a little more clear in terms of what we've gotten. So this is that inefficiency that we showed, right? And biggest point is as price trades from stops, it's going to seek inefficiency. All right. So we're seeing order flow up close candles on a 3-month chart. These guys are supporting the direction of price. All right, down into the higher time frame discount array, because this was a 6-month array. All right. And this is kind of the current price action that we're seeing on EU right now, which poses the question of, does this become the low resistant liquidity run? Okay, and this could take years for price to reach back up to this point. This is a quarterly chart. All right, so every 4 candles is an entire year. All right, going down to the monthly chart now, on a 1-month chart. Actually, this is a 3-month image. Let's skip that. We'll go down to the weekly. All right, so looking at a weekly, this line here is resembling that array from the 6-month chart initially. But just think about the delivery down as price is reaching for that array. Order flow, right? Up close candles are supporting the direction of price. All right, so if you're a trader and you're understanding, if we go back to here on that 6-month chart, if you're a trader and you're understanding that, okay, cool, we've taken stops and now we should attack inefficiency. you'd have no issue understanding why the order flow is bearish for this little segment of price, right? That little segment of price is what we're looking at right here on this weekly chart, all right? Because price is reaching for that inefficiency. We've gone stops, and now we're reaching down into an inefficiency, which is this movement here, all right? So order flow is bearish. Why is order flow bearish? Because up close candles are supporting the direction of price up into the extent of a higher time frame array. All right. So as price was going, stops to imbalance, stops to imbalance, stops to imbalance, stops. What happens to the inefficiency here? Boom. All right. Cause and effect, higher time frame array. We see this. Now what you're going to see is that discount arrays have started supporting the direction of price, right? Down close candle here, down close candle here, down close candle here, right? Down close candle, I'm sorry, right here. And then we've literally just traded through that down close candle. All right. Well, actually, this down close candle. Okay. But that's for another topic or conversation in terms of framing out what we're getting in terms of euro, because we do have a 1 month inefficiency at the 0,400 level. All right. So taking that from the weekly chart, looking at a daily chart, right? Looking more in depth at institutional order flow, we can see these up close candles are supporting price. So when we talk about high and low resistant liquidity runs, right? You're seeing that low. Every time price creates a low, that becomes a low resistant liquidity run. All right. These highs are more protected because price has a more discounted objective. So if you're taking the buys, you're trading a high resistant liquidity run. If you're shorting, you're trading a low resistant liquidity run because you're trading with institutional order flow. All right, meaning that you're going to have an easier time reaching those external range targets. All right, so most of the times when you're trading with the low resistant liquidity run, price is going to have a pretty easy time reaching those external range targets. When trading the high resistant liquidity run, you're going to basically be trading to an internal range array or some type of target, and you shouldn't expect price to run and create some type of opposing stop run, so to speak. All right, because it has that discounted objective. And you can see here on the daily chart, right, what we do to that inefficiency. We come down, right? This is a failure swing. Remember, every reversal point in price, there's going to be one or two signatures, either a breaker or failure swing. We get failure swing literally right here. And then we're off to the races for EU. All right. I don't believe there's any, no time frame, Laura. All right. So that is our understanding of institutional order flow, right? That is to be applied on any time frame. Okay. You can take that and you can start moving into more of a response-based approach behind price.